This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And if you haven't guessed by now, we have a lot of bad news, and it's about time you got some good news. And so that's why our guest today is a longtime friend, Harry Dent. He and I go back and forth about Puerto Rico all the time, but he has to live there and I don't because I'm in real estate and he's not. So that's the difference here.
That is true. I'm not that much into real estate.
Yeah. And Kim is in South Carolina and I'm in Scottsdale, Arizona. So it's going to be a very important show because I think by now people are kind of realizing for the first time, for many, the first time, that printing money doesn't work, and that's their only solution they got left. So that's why Harry and I have joined, just joined at the hip. We come with different solutions. So today I'm going to hear Harry's solution because I think Harry's solution is more viable than my solution or Kim's solution. And so that's why it's a very important Rich Dad Radio Show. Any comments, Kim?
Well, I'm looking forward to today because Harry's been quite prophetic over the years, and I think he has some maybe not predictions so much as the research that he's done and the studies that he's done and the demographics that he studies of what's coming down the pike. So I'm anxious to hear his take, Harry, your take on where the economy is going, and you had some very strong comments. So I look forward to talking with you.
Also, I want to endorse Harry's work because his forecasting is pretty accurate.
Yeah.
Very accurate because he's a demographer, which means, demographics, people, generations, time. And as they say, demography is destiny. Is what's happening with the people is the future. So Harry, welcome.
Harry.
Always wonderful to hear your points of view because we both agreed one of us is not necessary. So Harry, welcome to the show. Thank you.
Yeah, nice to be back.
Okay. So what are you talking about today? I mean, I have a lot of questions for you because it is about solutions. I think people are finally waking up that something might be wrong. I mean, by my demographic analysis, the greatest boom in history. When I was predicting this in the 80s, people thought I was crazy, that the U.S. could do so well. They thought Japan and Asia was going to take over the world. I said, no, that we still have a giant, one of the best baby booms in history coming along, and they're going to spend and earn a lot of money, and we're going to have the greatest boom in history from 1983 to 2007. And then 2008, of course, it did go down. And I predicted that 20 some years before it happened. Okay, but forget that. That caused a shock to the economy. And then governments have been printing money ever since. Now to print money for a year to overcome a strong downturn like 2008-9, I'd agree with that. 1 year of money printing. To be printing money 13, 14 years and escalating and printing and fiscal stimulus combined after COVID for 2 years, $10 trillion, half of GDP, is insanity. So this shows how crazy things have gotten. Governments we should have had, my forecast all the way back to the 80s when I started with my generation cycles and technology cycles every 45 years, the generation are more like 38, 39. And we'd have the greatest boom in history, but it would slow after 2007 and not come back with the millennials until about 2023, 24. Well, what we have now is we have the greatest bubble in history because governments fought the slowdown after 2008, which was very serious and would have been more serious and should have lasted into 2010, much like the 29 to 32 collapse. They just bubbled up financial assets. They haven't changed, incomes and stuff. They bubbled up financial assets, which means the rich, which were already getting richer in the greatest bubble boom in history, got even richer, and everyday people are still struggling. And now we have an economy, and I've been warning for years, I don't know exactly what's going to happen, but it's happening now. You can't do this forever. You can't just print money and grow an economy past its fundamentals of what I study better than I think anybody in the world. When do people earn and spend money over their life cycle? What's the life cycle of people, and how do generations, particularly
the largest in history, at least the largest in 250 years, the baby boom generation, affect that boom and bust. And we are still in the bust wake of the baby boom's peak into 2023-24 before we can grow through natural causes. And I see that this government printing scheme is now failing, despite printing more and more, failing anyway, because you can't do this forever, and it's going to collapse, which is just in time for us to balance out the economy so we can grow again with the millennial generation from 2024 forward. So I'm happy to see this collapse. I'm happy to see a downturn, damn it. We should have had a bigger one in 2008, 9, and 10 and got rid of most of this bad debt. Now we have more bad debt than ever. We're going to get rid of it in the next few years. It's going to be painful.
So, Harry, my question for you is because, my definition of intelligence is if you agree with me, you're intelligent. If you disagree with me, you're unintelligent. So you and I agree on the causes and symptoms and what's happening. We just disagree.
And then not many, we've spoken a few couple of opinions. Not many people will agree with us, even though what I see, we have the most common sense approach. I mean, it's not only factual, it's common sense that you can't just grow by printing money out of thin air. I mean, how common sense could it be to that? We've been printing money since 2009.
Harry, tell us how you really feel.
I mean, this is insanity. You know what? Who are the most insane people in the world? People who get high. Okay. It doesn't matter whether it's heroin or crack or alcohol. People get high and then they do stupid stuff because their brain stops working.
Harry. So
the whole world is high on nonstop stimulus since 2009, and this will not end well. That's the most common sense thing I can say.
We agree. We just come up with solutions, right? So again, Harry and I agree on the causes of it, but not that we disagree, we have different solutions to it. And our solutions are different because of our skill, background, and educational things like this. And to back up what Harry says, I won't mention his name, but he puts on Freedom Fest. I'm banned from that place. Because you know why? Because I went up there and I had a book called Rich Dad's Prophecy, and I was predicting why the bigger crash was following 2008. And this freedom-loving promoter of Freedom Fest banned me from it because how dare you say that? The stock market always goes up. And I went, I don't know what the heck you're doing here, but you must be smoking something. So
or you weren't around from late 29 to 42 when it went down lower and lower and did not get back to even until 1953, 25 years later. So that's called smoking crack.
So Harry, to that point on the stock market, you said the first wave of this downturn of the stock market is already happening.
Yeah, no, I think it already just bounced. We're bouncing out of that. It's not that strong a bounce, by the way. I don't think it's going to last past this month if it has not already peaked.
So Harry,
now, the proof of my concept, and I think Robert's here, obviously, if we see another wave down, which would be the logical thing, forget everything we're saying. If I'm just looking as a stock chartist, we had this first crash, a tepid bounce, and we have another one of the same magnitude. We're going to see 73.50, on the NASDAQ, down more than 50% by late this year, early next year. And then people are going to know something is really wrong.
So Harry, this is my question. I mean, we agree on all that. I wrote this book here, Who Stole My Pension? And that's for the baby boomers because we were the boom generation. 1974, the government passed ERISA, which became the 401k, which is the biggest Ponzi scheme I ever saw. And now they're pulling the rug out from all the baby boomers. And I'm sure your numbers are going to be very accurate because you are very accurate in your predictions. So the baby boomers are toast. So they were the boom. Now they're the bust. Hold on. Harry, how come people don't know this? What blocks them from knowing?
Just normal. You believe what you want to believe because you want to believe it. The baby boom did cause, and I was the first one to say it, and it took me to the mid-'80s. I didn't get it in 1982 fully. Mid-'80s, see, this generation's going to go into their peak spending cycle all the way into 2007, greatest boom in history, going to make the 50s and 60s Bob Hope generation look like nothing, but then it's going to crash. Okay, so that's the problem now. It did crash, and the bigger problem is government said, well, we're not going to let it crash. And I'm like, who the hell are you?
But Harry,
who are you to
Harry,
think a bunch of politicians that never did anything for a living, most of you, and say, oh, we're just not going to let the economy do what the economy will do to correct an imbalance of overinvestment in bubbles and financial assets and bring them down to normal so we can grow again. They're fighting it.
Okay, good. So this is the book Prophecy. It was after 2008. And I said the biggest crash was coming. It's here now. And the question again, and that the guys,
and they're still fighting it, and it's still going to happen anyway.
But why does
We're
this?
going to be right about it. It's going to get worse than people think, even now when it's finally starting to go down, despite endless government.
I understand. So my question again is,
I'm talking to your audience, not you, Robert. Okay.
Yeah. Why don't
you understand?
Why don't people listen to idiots like us? Why do they believe these guys? Like, have you heard of the Kramer factor, Jim Kramer? Whatever Kramer predicts, you go short.
I can't even watch this guy. He's a smart idiot. He just entertains. He has nothing to do with the truth. All I do is research what happens in history and what causes things and what doesn't, and that's the truth. So, and you do not get a bubble like this. There has been no bubble any time in all of history that has not burst badly and rapidly when it does, and it's already started. And people are still in denial, included stupid Kramer. He's an idiot. Doesn't he not look like an idiot? Does he act like an idiot? Well, he's like a duck. He's a duck.
Harry, my question to you isn't one of the problems is people choose the wrong prophet?
Well, no, they choose what they want to hear. If you're in a boom and you're invested in the boom, I mean, everyday people didn't used to have so much money in stocks. It was more in real estate. And real estate does not go down like stocks does. Real estate is more stable even when it goes down. And everybody now has to root for this thing to keep going. And so they'll listen to the people that say, oh, no, don't worry about this. Don't worry about debt levels. Don't worry about demographics declining, which they're declining at the speed of light in all developed countries in the world. Somehow the government will bring us out of this.
So Kim, we got, hey, Harry, we're the new age men. We're going to give the woman.
And so we're not going to be listened to until we're right, and then it'll be too late. That's my point.
Well, I got two comments. And to your point, Harry, of course, if you're vested heavy in the stock market, you only want to hear that the stock market's going to keep going up. That's what you're going to pay attention to. My question is then, you're on the demographics of the baby boomers. They went at their peak in 2007. What's the impact of millennials? Are they going to have The
millennials bring us up through natural causes instead of printing money from 2024. And I'm very precise about this. I said from the beginning, the baby boom thing was going to peak in late 2007. I said that in the 80s. That's how predictable people earning and spending money as they age are in generational surges. And the baby boom was a big surge. So of course, a great boom. So we've been down ever since then. The millennials do not bring the upward natural momentum until 2024, and they will peak by 2037, much shorter boom than the baby boomers.
So what was it? Boomers were like 46 to 64 was a boom generation. There was a Gen X behind us?
Yeah. Okay. Let me be more precise.
Gen X, because let's
Births turned up noticeably from 1937 into 61. That's the rising baby boom, which on a lag, predictable, quantifiable lag for peak spending at 46, moving towards 47, would have given us a peak in late 2007. I've been preaching that since the 80s. And people back then were saying, Harry, you're crazy. The US is done. Asia's taking over. Japanese make us look like idiots, And I'm like, yeah, they're growing and they're going to grow longer, but we still have the greatest baby boom in the world. And we're going to have the greatest boom in history until 2007. And then it's going to collapse.
Who is Gen X and what's their challenge now? Because that's a large generation too. Not a large.
Gen X is the declining birth rates from 1961 into 73 to 75 that caused the slowdown from 2008 still into 2022-23 before the millennials born after them take it up. And even the millennials, here's the important point, and nobody gets this, okay? Even the millennials, with their spending power as a smaller generation, less long in birth, only take us back to where the baby boomers took us. We only get back to even adjusted for rising productivity. We will never see a boom like 1983 to 2007 again in the US, and most of the developed world will never, and Europe's already behind us.
Okay, so
that's the truth.
So my question is, what's going to happen to Gen X? Because they're the sandwich. They're sandwich right now. They're the spread.
Well, they're causing the slowdown, but they kind of benefit because when asset prices go down eventually, which they aren't yet, the government won't let, when they do finally crash, they're going to be able to invest at more reasonable prices again and be able to invest for retirement. I tell you, anybody right now in the markets, whether it be bond markets at the lowest interest rates ever, long-term, or stock markets, the highest valuation, if you invest today, even with no predictions of up and down economy, you're likely to make, a couple % a year for the rest of your life. You're not going to be able to retire profitably until the markets come down to reality and you can invest at fair asset prices again.
Okay,
across the board.
I'll let Kim give her a breath here before we go to break. So Kim, any final thoughts or things you want to say?
I want to go back to the millennial generation because on the demographic side, because I see, so much has changed in the economy. People aren't going to work in the office building anymore. They're working from home. Millennials don't seem to be having the income that baby boomers had. They seem to have a different work ethic. Does that play into the cycles of earning money, spending money, all of that?
Ask me how long I've been working at home. Since 1989, okay? This is a new trend everywhere. It's a good trend. People don't have to spend an hour or two commuting every day and sitting in the car. It's only more productive, okay? It's just that the millennials are causing, with less spending than the baby boomers who already peaked at age 46 to 47 before them, they're causing a slowdown. And instead of governments helping to restructure debt. We've got tons of bad debt now from the great boom from 83 to 2007 that needs to be restructured. They're encouraging people to keep that bad debt in place and not to reinvest in new industries and stuff. They're doing all the wrong things because they don't want to have a recession. You know what recession is to me? Sleep. Try not sleeping for 3 days and not become a crazy person. It's already proven. 3 to 5 days, no sleep, you'll become a crazy person. We have to grow and expand all the innovation of the past, and we have to slow again and restructure and cut out losing companies and losing things and reinvest in the future. And governments are interrupting the free market capitalist system that has made us the richest and the greatest advance since the late 1700s in all of history because they don't want to have a damn recession.
Isn't
that stupid?
Harry,
the stupidest thing I've ever seen.
That's stupid.
Harry, you need to take 3 days off. Anyway.
I'm telling you, I'm a standard. This will go down as the stupidest thing in all of history, greatest boom in history. And just when it needs to restructure, they screw it up so we can never grow again because we never restructure bad debt.
Okay, Harry. Take a break, my friend. We're going to go to solution because you've been talking about the problem. When we come back, we'll be going more into the solution because Harry's solution is different than my solution and different than Kim's solution. We'll be right back.
On the show, Robert stresses the importance of investing in assets that will outpace inflation and keep your wealth safe during recessions. But in 2022, that's easier said than done. Stocks and bonds often see negative returns when prices drastically rise. Real estate doesn't hold its value, and commodities have already surged. There's not much left. Well, according to Bloomberg, there's one hard asset nearly everyone is overlooking: fine art. They say art can serve as an inflation hedge in almost any environment, and Bank of America agrees. They declared that as inflation reaches a secular turning point, investors should buy real assets like art. Contemporary art appreciates by 23% annually on average when inflation is above 3%. That's significantly better than real estate and gold, but none of this should surprise you. Why? Ultra-wealthy investors have preserved their wealth with art for hundreds of years, and now you can too with Masterworks. It's the new tech platform that lets you invest in shares of paintings by Warhol, Picasso, and Monet, and the results so far have been incredible. Since 2019, they've sold 4 paintings and got a 30% net return every time. And you don't need hundreds of millions to hedge your portfolio with art anymore. You just need a solid internet connection. To date, users have invested over $500 million with them. And here's the best part. You can skip the waitlist and try Masterworks for free by going to masterworks.art/richdad. That's masterworks.art/richdad. See important disclosures at masterworks.io/CD.
Feeling powerless over current events and your financial future? Financial freedom is your freedom. Robert Kiyosaki is the best-selling author of Rich Dad, Poor Dad. Over 40 million people have taken Robert's advice. Now it's your turn. Attend Robert's free virtual wealth building event. Claim your free access now at richdadfree.com. Don't wait, access is limited. Go to richdadfree.com. That's richdadfree.com.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today we have one of the leading experts. I mean, he's one of the most accurate forecasters I've seen because his expertise is demographics. And it's a saying in any kind of marketing, things like this, demography is destiny. So when you watch what the demographics are doing, you can almost predict the future. So Harry's work is extremely brilliant. This great boom ahead, and he's attacked like I'm attacked because we're go counter to the popular culture of bullshit in markets. And so we got through the problem. It's a lot of it just mismanagement of debt and printing money to solve problems and all this. And we're now in a triple bubble. We have a real estate bubble, stock market bubble, and bond bubble. And every time Harry speaks, he says the solution is treasuries and bonds and all this. And FYI, I don't own any paper assets. I don't have any stocks, bonds, mutual funds, ETFs. And the reason is, being entrepreneurs, we don't need them. We can create our own assets. And when we talk about real estate, we're talking about income producing real estate, not commercial and not residential. You know, I'm not gambling on my house like the baby boomers are. So every time Harry talks about the bond market, I want to stop and ask him what it is. So here we are. This is my opportunity to ask Harry a very important question. Why are you excited about, not excited, but you confident in bonds is a thing?
Okay, what happens? So all of this stimulus on top of the greatest demographic boom in history, but which did start to fail. So all this stimulus throws money into the economy. What do governments do with this stimulus? They buy financial assets. They start with bonds, but the more money goes in bonds, it will trickle into higher valuation stocks and real estate because that's where the returns are. So what we have now, and I got a number on this, it's close to $600 trillion in financial assets globally. Okay, 600 trillion, that's about 7 times global GDP at 95 trillion. And normally financial assets are a premium 2, maybe 3 times. So the biggest bubble in the world is all financial assets, even bonds. And when you have a crash like this, when these financial assets start to crumble, the money has to go somewhere. It goes into the safest areas. So it is the income producing real estate, multifamily mostly, and it is the treasury bonds, the highest quality government bonds. If the US government can print enough money to keep a dumb bubble going, they'll certainly print money to pay their bonds off, their treasury bonds, okay? You don't have to worry about a default on 30 or 10-year treasury bonds. And again, I go back and say, okay, let's look at 2008. When I look at the 2008 crisis, that was like 1929 to 32 coming in, except this time, massive stimulus, which they didn't do back then. So they come out of it, okay? But that's when you see things go down, financial assets go down, flirting with deflation. This time we're going to deflate more because they've tried to pump it up and it's failing anyway. So financial assets keep falling. So the money has to go somewhere. So what it goes into the safest bonds and the highest quality real estate, which is the people. Again, Real estate's gotten just as overvalued as stock. The people who are renting real estate, multifamily, the people who will need it more than ever, even people who would rather buy, can't buy in a bad market and hard to get loans. It's the safe areas. It's the US Treasury bonds, which is the best bonds in the world. Other government bonds are good. Nothing's going to beat a 30-year Treasury bond, and nothing's going to beat in the real estate area, multifamily, rental real estate, because people who are thinking of buying and it's overpriced, and then they see the prices fall, they're going to be more scared. So renting will.
So Harry, the big distinction is, there was a thing called junk bonds and this bond and corporate bonds and all that. So you're saying government back, like the U.S. government.
Yes, AAA corporate, and in the world, even. Who's the best house in a bad neighborhood? Already been through. Is Europe in trouble? Yes. Has Japan been in trouble forever? Yes. Okay. US is still the best house in a bad neighborhood. So, and our bonds went up in 2008 crisis, 45% Treasury bonds, 30-year Treasury bond, and they're going to go up more than that this time. So you go to the safest places. Again, where can you get predictable rentals, even in bad times, from real estate? And that's from apartments and multifamily. And where are the best bonds that will be paid no matter what, when all financial assets have to go. Now, here's my number. From 600 trillion worldwide, they're going to have to come back down to about 250 to 300 trillion. Now, think about this. Globally, 3 times global GDP in 95, $300 trillion, give or take, 250 disappears in financial assets and doesn't come back for a long time. That's the big news in the next coming years. So as long as you're protected from that in the right real estate and in the right bonds, the highest quality, longest term. If I could buy one thing, it'd be a 30-year Treasury bond.
Okay, U.S. government.
U.S., not Tanzania.
What kind
Not
of
even Europe. Europe has much worse demographics and already been slower than us. U.S. as a developed country is going to come out of this after a damn near short-term depression, the best. And our millennial generation, Europe doesn't have one, by the way, okay, is going to be the best in the developed world. So we come out of this better, and our bonds, our U.S. Treasury bonds, 30-year Treasury bonds would be my number one recommendation right now.
Okay.
And not that you buy ZROZ, ZROZ, which is an ETF that balances 20 and 30 and leans towards the 30, so 25-year average.
Would you give that? We don't make recommendations, but if you do it, we'll let it go. What do you think is the best ETF?
ZROZ is a 25-year average, so it's a blend of 10 and 30-year Treasury bonds. They lean towards the 30. TLT is about 50-50. Okay, so the ZROZ ETF will go up about 50% faster than the TLT, and the TLT has already done very well since this crisis set in at the top and boom, and we'll do much better when we get it to work. In 2008, the worst of it was in late 2008, TLT and ZROZ went to the moon.
Thank you. That clarifies it, because in my mind, I still remember junk bonds and all that stuff.
Oh, junk bonds. So the highest risk bonds go down the most, more like stocks, right. And the highest quality, like 30-year Treasury bonds, go up the most as the safe haven. And gold, which did well in the early parts of the last 2008, went down 40 to 45% in the latest stages. So gold was not the worst place to be, but it in the end, it went down with everything else. Gold, I'd rather have gold than anything but these Treasury bonds. Right.
You just tell me, why doesn't Europe have a millennial? What happened there?
Because they're older, they've been around longer, they've been richer longer, and people who are rich have fewer kids. Poor people have more kids and rich people have fewer. You know that, you're a rich dad guy.
I understand that, but I didn't know Europe.
We should promote rich people having more kids, but the natural propensity, people that have a life say more kids ruins that life, and it's better to have 2 kids and be done. Poor people just keep having kids.
But and to your point here about multifamily, it's exactly what we're seeing, because we do have a lot of multifamily rents. Rents are going up. Demand for apartments are going up.
If you have something where the income only goes up when all stocks and earnings are going down, is that not attractive? Of course it is.
Very attractive. Hey, I have a question, and I don't understand this. So I was told recently that the yield on short-term bonds is actually greater than long-term bonds. Does that make any sense?
Yeah, and it should be the opposite. Long-term, you're taking greater risk, so it should be higher. But when people see a downturn and deflation in prices and inflation going down and maybe going negative into deflation, then that's why those yields respond differently. That's a short-term phenomenon. And what I want to do now, and the biggest thing I get is people say, Harry, you're recommending 30-year treasury bonds. I'm not, I'm recommending them for the next 20, 30 years. No, they're for the crash. They're the safe haven in the crash, more than gold, way better than gold. And when the crash happens, I don't want to hold 30-year treasury bonds at 1 to 2% yields or zero. I want to get back into the best part of the world, and it's not going to be North America anymore. It's going to be better than Europe, but Asia is going to be better than North America and continue to be. That's simple. There's nothing simpler than demographics than that. We're better than Europe in the developed world, and as things move forward, all the growth is going to be in Asia, East Asia, going towards India, which after I die will be the richest, greatest, largest country in the world.
So that makes sense. That makes sense.
After I die, so I'm not going to get to see that one. I'm not going to be able to claim that.
Well, you never know, Harry.
You can put it in writing, but you got it in writing, so that's good.
I got it in writing. Yeah.
Yeah. So
my grandchildren will realize I was smarter than they thought.
Your bond play is just kind of a short term for the crash.
Oh, it's totally short term.
Put it in other assets.
And again, the problem is most people are recommending gold. I'm like, look at 2008. Gold kind of held up early, and look at in the worst, in the third and fourth quarters, gold went down 40-45%. Not the worst place to be in the first fight, but it was not the safe haven. The treasury bonds went up the opposite, 40-45%.
Right. I'm glad I asked you, because I don't have any bonds. So I was just, I look at an apartment house as a bond, if you know what I mean.
It's a high yield investment. I agree with you. And a stable, again, people are only going to trade down to multifamily, not up to expensive houses that are overvalued. So no, that's the defensive part of the real estate market. I'm saying the highest quality government bonds, particularly U.S. Treasuries, is the best defense in a crash.
That's fantastic. That's fantastic. Distinctions that we don't have. I got one more question though. When interest rates were coming down, the price of bonds were going up or something like that.
Yeah.
Why is that?
Because if you locked in let's say a 5% 30-year treasury bond, and yields now move down to 2% because of lower inflation, who's worth more, your 5% 30-year treasury bond or the new 2%? Your 30-year is worth a lot more now. So bonds appreciate when inflation comes down, especially the highest quality long-term. Now, a junk bond will not act the same. It'll say, inflation's coming down, but default risk is going up, and I'm a junk bond, so I got higher default risk. So that's the difference. In a crash like this, a deflationary crash, it is the highest quality U.S. government or AAA corporate bonds, which are the best. And between those two, why would I choose a AAA corporate when I can get a 30-year treasury bond, which they will not default on, even if they have to print money?
Going back in history, wasn't Ivan Boesky, wasn't he the junk bond king or something like that, or one of those characters?
I'm not an expert in Ivan Boesky. I remember his name, but it is interesting to study other places that have had inflation and crashes. I keep seeing people say this is going to turn into hyperinflation. No, it's not going to take much more inflation. It's already crimping our economy and bonds and stuff, and that's already going to lead to a downturn. I'm telling you, when we see this downturn, I think we're already into it. It's already starting now. Inflation will disappear at 9.1% or 10% if it gets the height, and never appear in the rest of our lifetime. That's a forecast.
Wow.
Never see inflation above a few percent for the rest of all of our lifetimes, even if you're 20 years old today. That's my forecast. Because inflation was the major baby boom entering a great expense, and that caused a huge inflation. You know what follows huge inflation? The disinflation and the boom that follows from that generation that caused it, and blah, 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 blah. We're not going to ever worry about inflation in the developed world again. Hey, maybe Zimbabwe, maybe Africa, but we will never, high inflation will never be a topic after
That's fantastic. Fantastic insight.
Prediction.
Fantastic.
I'll stand by that after I die.
So I got to ask you about Bitcoin. What's your take on Bitcoin? Long-term, short-term?
Okay. Very simple also. I compare the cryptocurrencies. Bitcoin's just like the Amazon of it, okay, of the new .com retailers that were the rave of and they were the rave only in the last part of the 90s bubble, and were the epitome of it. Amazon led that bubble and crashed 95%.
Wow.
Before it then went from 136 to 6 and then to 3,500, the next boom.
Good.
That's how I see crypto. It's the next big thing. I didn't get it myself, Robert and Kim, until at my own conference, a guy was speaking. He said he defined crypto as the digitization of all financial assets and money. And I'm like, what's bigger than GDP 6-7 times all the financial assets in the world? And I'm like, oh, this is a big deal. It's the next big thing. So what happens? The .coms and Amazon as the epitome bubbled in the late 90s, and that bubble crashed 96%. People thought they were dead forever. And then of course had the greatest boom in history. I see Bitcoin and cryptocurrencies, and there's 40,000 coins. Think of coins as an IPO with no cost. Okay. It's a very.
We lost Harry's connection. Kim and I are still here. But his information is priceless. Like I said, I respect his demography. He's very, very accurate in his predictions. So anything Harry Dent writes about, talks about, I understand. And I just never understood bonds because I don't have any paper assets, stocks, bonds, mutual funds, ETFs. And the only stocks, bonds, mutual funds, ETFs are the ones we make ourselves because we're entrepreneurs. We don't need to buy somebody else's. Any comments, Kim?
Well, I think it's very interesting, especially what he was saying about bonds. And the big aha for me is because I never understood why would you be in a 30-year investment that's paying 1 or 2%. And then he said, no, it's your hedge against the crash. When the crash came, that's where you want to store your wealth or store your money. And then as it eases up, then you get out of that and you invest in other things. So of course, I like what he says about multifamily housing because that's what we're experiencing right now. Rents are going through the roof in where we have our properties. So I thought it's good. I wanted to hear a little bit more about Bitcoin. I know he also has, Harry also talks a lot about gold, and he sees a big downturn in gold and then an upturn. So I love the demographics because it's based on facts. It's not based on opinion. It's not based on some who-to-do theory. It's based on the demographic facts. So that's why I appreciate Harry and his input.
His brilliant researcher. Anyway, one more thing about booms and busts. What Harry's saying about the 30-year is basically you're getting ready to pick up more product whenever it is. So it's the same as us. We don't buy real estate when it's high. We buy it when it's low. And so that's what Harry doesn't say is that gold is coming down. It's about 1,700. Well, you and I have been buying it since it was 50.
Right.
And then in 2000, it was 300. So when you look at the macro or the longer term on it, so while Amazon was coming down, gold was also coming down. So you and I have backed up the truck on gold. And today it's worth 1,700. If it goes to 2,000, good. The point here is that it's when you buy, not when you sell. And the reason I think a lot of real estate guys are going to get crushed are the flippers, because they still expect the price of real estate to go up. So they're flipping the family home or they're taking out second mortgages on their home because the so-called the value of the property went up. But real estate is also supply and demand.
Yes.
There's a huge, there's a shortfall of real estate in America. Demand is going up. So that's why residential is good as incomes come down. I mean, apartment houses are great because people are backing into apartment houses.
Yeah. And you also have to look at some of the factors because we've just experienced this on one property, supply and demand of supplies. So if some people are out there building and now they're getting caught because the supplies have gone up so much in cost, plus interest rates have gone up in so much in cost. So you really need to look at so many different factors when you're looking at buying real estate and what you're going to do with it.
Right. And that's called timing. Are you watching the ups and downs of markets right there?
Can you hear me?
Yeah.
Yes.
Yeah.
Our electricity went totally out here. I am in Puerto Rico, by the way, one of the disadvantages. Although the 4% tax rate makes up for it. But yeah, we totally went out. We're totally out of electricity.
Harry, can you tell our audience how they can learn more information from you? Is it harrydent.com? Is that the best place?
Yes, harrydent.com. What they do, they get on we have a free newsletter, which in other words, I and my partner, Rodney Johnson, write a one-page article every week to these people until they decide we're worth listening to and getting on our newsletter. So it's a free newsletter at harrydent.com. Free weekly newsletter.
The price is good.
And yes, it is.
Yeah.
And so, Harry, what's any final words for our audience?
My thing is take this seriously. We've had so many corrections now, and we've had this boom go since 1982 now. And even when it should have gotten a lot worse in the last decade, they propped it up. Be serious. You cannot have something for nothing economics work forever. And the fact that after the $10 trillion in combined fiscal and monetary stimulus in 2 years after COVID, we are already falling in a recession again. If that doesn't tell you something's wrong, you better wake up. This is not going to be a recession. It's going to be a mini depression that'll take a couple years to work out. And if it's allowed to work, Robert asked me my solution. My solution is let the economy wash out all this debt and bad companies. More zombie companies than ever, highest levels of debt levels and bad debt ever. We have to wash this out, or even with the millennial generation's demographics, we're going to at best crawl out of this instead of rise. So I want to see a downturn that restructures debt. And what did I do early in my career? I was a consultant to Fortune 100 companies that failing, and I decided they sucked. So I became a consultant to new ventures that are always failing. That's what they do for a living. And in a turnaround, you have to cut costs, cut debt, and reposition for the future. And everything the government's doing is keeping us from doing that so that we can actually enjoy the next boom when the millennials drive us up. So I'm rooting for this to go down harder, faster, sooner, so we can take a big restructuring of debt and zombie companies. Zombie companies are off the chart, debt's off the chart. That's the problem. Demographics are a problem, but only until 2024, then demographics turn around.
Okay, so we come back with a final word, but I want to thank Harry Dent. Too bad he got cut off, but I think we got the message from him. Guy's a brilliant demographer. He understands these generations. I didn't know that Europe didn't have a millennial generation.
I didn't know that either.
No, and the cause is when you're wealthy, you don't have kids. So that should be a lesson out there to all of you future kid bearers. When we come back with a final word from Rich Dad. Welcome back, Robert Kiyosaki, Rich Dad Radio Show. Kim's in South Carolina, and I'm in Scottsdale. I'm here with Sarah, and we're in the office. So we're going to final wrap up. One thing is Harry recommended those bond things. Rich said we don't endorse or recommend any investment. We do our best to be purely informational and educational, and what you do is up to you. So any comments there, Sarah?
Yeah, the biggest thing that I took away, it just goes back to demographics, which we've heard, Harry talk about in other contexts. But this was really interesting for me about Gen X and their declining birth rate. And they'll actually be the beneficiary of this declining birth rate because the economy's slowed down. So they're going to be at the prime time to buy these assets when they're at a low price. And so really that's optimistic for my generation.
Are you Gen X?
I am Gen X.
Okay.
Yep. So those millennials, though, it sounds like they were a little bit screwed, but so I'll take advantage.
Yeah.
Well, and Harry did say, of course, he's talking about the stock market coming down and a lot of things coming down. I mean, what we never did talk about is if you are prepared and know what to do when everything goes on sale, it's going to be a huge opportunity if you know how to buy and to buy right. So as you said, Robert, it's always about when you buy. And this is going to be a buying opportunity for a lot of people.
That's what Harry was saying. He goes to 30 years an interim step, U.S. bonds. It's also junk. There's a lot of different types of bonds. Bond market is much bigger than the stock market. That's why it's so dangerous. You know, if it goes up and down, world economy goes up and down with the bond market.
Yep.
So that's why we don't recommend flipping houses, because right now, that's what caught a lot of people in 2005, 2006, and then 2008 hit, and they're flip-flopped, you know. So you don't find me flipping. So with that said, final words, Sarah?
No, just appreciated the lively conversation.
Yeah, what's Harry's information? Contact?
His website's harrydent.com, and he has a free weekly newsletter.
The Price is Right, and he's worth listening to. The guy's brilliant at demographics and the economy and bonds and those things.
Yeah.
Final words, Kim?
No, I appreciated this interview a lot, and I think the best finish was his words where Harry said, you know, you got to pay attention to what's going on here. You might want to be patient, but you need to really look at what's going on, get yourself educated, and understand where this market is going, because, as he said, it's probably not going to be a soft landing. Right.
And with real estate, you know, what is demography again is destiny, is that if a place has jobs, real estate's strong. But if a major, company leaves, real estate crashes. So in real estate, it's not just real estate. You got to know your demography, your locations, where it's going. But the biggest thing where Kim and I are investing is in the Southwest United States, like Texas and Arizona, is that there's a short supply of real estate. They didn't build enough. Now, if you're into commercial real estate, like shopping centers and office buildings, you might be in serious trouble. So real estate is not just real estate. You still have to know what you're doing. So once again, thanks to Harry Dent. His conversations with me are always exciting, but we generally agree except on the solutions. Thank you for listening to Rich Dad Radio Show.
Thôi mong chờ, vậy sao bật khóc trong ngu ngơ. Vẫn thế đây bao lâu nay em không hay, chỉ một mình anh ngồi khóc. Nước mắt đây riêng nơi đây em không hay, sự thật là anh nhớ em. Người giờ đã xa, lời hẹn ước đâu rồi. Nước mắt đây rơi biết bao lâu thì khô. Vẫn thế đây bao đêm say em không hay, từng giọt buồn sao mặn đắng. Nhưng lúc ấy anh loay hoay trong cơn say, lại nhầm rằng em ở đây. Người giờ đổi thay, tình mình vẫn đong đầy. Thế mới biết anh vẫn yêu em, thì sao tìm quên chốn xưa ngày ta quen.